Hello everyone, my name is ATP and welcome back to another episode of our Testing Indicator series. Today we are diving into the Zero Line Volatility Quality Index, a new oscillator designed to identify highly accurate buy and sell signals based on market volatility. I will show you how to use it effectively and test it on almost 6,000 trades to see how it performs. If you are new here, don't forget to subscribe and let's get started. Before we dive in, here is a quick shout out to one of our subscribers who suggested the Zero Line Volatility Quality Index. In the previous video, we tested a strategy where this indicator acts as a trigger for buy and sell signals, yielding profitable results across 7 different time frames. If you missed this video, be sure to check it out after this one. Today, we'll focus only on the ZL indicator to evaluate its standalone performance as a trigger indicator. If you have an indicator you would like me to test in a future episode, drop it in the comments or share it in my free Discord community. The link is in the description. Firstly, let's start by adding the indicator to our TradingView charts. First, click on Indicators, then type Zero Line Volatility Quality Index, and you can use this option here by locks, which is free. By definition, the ZL indicator is an oscillator that analyzes potential entry points based on the market's volatility, with a unique calculation method that makes it more adaptable to different symbols and time frames. For the settings, I will use 14 for the smoothing period and 7.5 for the type. As you can see, this indicator is displayed as a histogram with a line that oscillates around the zero line, giving us these long and short signals that we'll use to enter in trades. Now that we understand how the indicator works, let's move on to the backtest. For our testing, I will follow the same approach as usual. I will define our technical system, risk management rules, and testing conditions. The technical system will include using the ZL indicator in addition with a 200 period exponential moving average to filter out some fake signals. Here you have an example of a long position where the price is above the 200 EMA, and here you have a short trade example where the price is below the baseline. For the risk management, I will insert the ATR bands indicator with a multiplier of 2, which will help us set our stop loss levels based on market volatility. As for the testing conditions, we will backtest the ZL indicator on the 30-minute, 1 hour and daily time frames using data from the last 24 months, so since December 2022 until December 2024, across a diverse asset portfolio including Bitcoin, Ethereum, XRP, 3 currency pairs, gold, oil, the S&P 500 index and the Apple stock. With everything set, let's dive into the backtesting process. While I could go back in time and test everything by hand, as probably all of you will do, I prefer to speed up this process. For that, I'm going to use my premium indicators testing bot, a trading tool that allows me to test hundreds of indicators and strategies in seconds and with proven results. You can find more information about this tool and how to use it on my website AlgoTradePro.com, along with a video that explains its features and benefits. Almost 200 traders are using this tool with great feedback, so it's definitely worth checking out. Once we have set all the conditions, including the Zero Line Volatility Quality Index, the 200 period EMA for baseline, and our risk management rules, the trading bot will execute every valid trade on the charts with a respective entry point, stop loss, and exit point. Also, you will see the monthly results displayed along with overall statistics for each asset in the Strategy Tester tab. And since I have the premium TradingView plan, I can download all the trades the bot executes, which I will use to create my trading journals. I will speed up this part of the video, but feel free to slow it down in the YouTube settings if you want to catch every detail. I will see you in a few seconds. After inserting all the trades into my trading journal, I got an analysis of about 5,800 trades across the 3 different time frames. In the 30-minute time frame, after more than 3,800 trades, the ZL indicator got a win rate of 48.72% with a net loss of 107%. Here we've got some other stats, and in this table you can analyze the results of every single asset, where you can notice that Bitcoin was the best performing asset, with a net profit of 44% and a 52% win rate. But the majority of the other assets were unprofitable, something reflected on the equity chart, which was awful. With these results, we can conclude that this indicator is probably not suitable for lower time frame strategies. Next, in the 1-hour time frame, after almost 2,000 trades, the results were a little better, because the indicator achieved a win rate of 50.83% and a net profit of 83%. Here you can find other important metrics, the results of every asset where the XRP was the most profitable one, and below you can find the equity chart, which, despite being profitable, wasn't efficient due to its big initial drawdown and flat periods. Finally, in the daily time frame, after 86 trades, the indicator achieved a win rate of 53% and a small net profit of 8%. Based on this backtest, it's clear that while the ZL indicator showed decent performance on certain assets, it lacks robustness as a standalone trigger indicator across multiple timeframes and markets. For example, it performed well on Bitcoin in the 30-minute timeframe and on XRP in the 1-hour one, but most other assets yield inconsistent or unprofitable results. This suggests that while the ZL indicator can work in specific frameworks, it isn't the most reliable choice for a trigger function on its own. However, as we demonstrated in the previous video, combining this indicator with other tools to filter out false signals, like filter or baseline indicators, can significantly enhance its performance within a strategy. Of course, it's important to note that these results are based on the specific conditions and settings I used for this test. If you change the conditions, settings, or even the assets, your results may change. So always test your strategies before putting them into practice. In this series, my objective is to test different indicators to discover which ones give us the highest probability of success. After evaluating the zero-line volatility quality index alongside other indicators in this series, I have decided to place it in this position on our ranking table. Tell me in the comments if you agree with this position or not. This updated table is also available for free on my website, providing a comprehensive overview of all the indicators tested so far. Simply click on the free content option, scroll down a little bit and click here, where you can find all these details. Also, if you are interested in improving your trading skills or would like to work with me one-on-one, you can explore my services on my website as well. And that's it for today. Thank you for watching and I will see you in the next episode. Bye bye.